So NFP, what exactly is NFP? Well, it's non-farms payrolls, and it's actually it's an interesting report for a couple of reasons. Number one, it's one of the few reports that there's a private competitor, so it's an official report that comes out from the Bureau of Labor Statistics. And now, I have to say, the Bureau of Labor Statistics has a bad record of developing economic reports that have any actual meaning. CPI, for example, by far the worst economic report that is known to mankind, is produced by the same agency. So this data is a little bit suspect, which is one of the reasons why it's unique and somewhat interesting. The second reason is that it's preceded by a private competitor. ADP, which is a company I've talked about before, they're a payroll processing outsourced HR firm, and they produce a report as well. Well, theirs comes out generally the Wednesday before the first Friday of the month, which is when the BLS non-farms payroll report comes out. So what exactly is this? It's gains or losses of jobs in the U.S. And of course, right now, the U.S. is kind of losing jobs. But let's balance this a little bit, and then let's talk about, is the report actually useful? So the ADP report comes out. It's a bit of a spoiler. And in fact, it came out today, and we saw a loss of 79,000 jobs. So we're down 79,000 jobs. Now, I have to preface this with, this number is typically revised the next month, and then the entire year is revised again in February. I don't know if you knew that or not. So the question is, well, how reliable is this number really? Typically, I don't get too concerned until the number is plus or minus 100K above or below. So that's when I start to say, well, despite its statistical problems, plus or minus 100K, so losing more than 100,000 jobs or gaining more than 100,000 jobs, that's something that I'll pay attention to. Just to give you an example of how much these numbers may be revised month to month, it's not uncommon for up to a 50% revision to take place. However, the takeaway here is that it's a bit of a teaser as to what we're likely to get on Friday. And this week, however, we're getting an early NFP report from the Bureau of Labor Statistics tomorrow, so that's only delayed by one day because Friday is a holiday. Well, what do we use this information for? Here's an interesting chart. So this chart is the Euro-US dollar, and a lot of traders will pay attention to this chart on the days, so Wednesday and the first Friday of the month, to try to take advantage of that volatility. Now, that's a very high-risk strategy. It's very difficult, and trying to correlate the announcement, whether it exceeds expectations or misses expectations, is somewhat dubious itself, because there really does not appear to be a whole lot of correlation. The subsequent 1 month worth of movement on the Euro-US dollar is almost random in its correlation to whether the announcement was positive or negative. However, there is an interesting correlation that is very tied to, and that is, of course, stocks. Now, that kind of makes sense, but what I find many traders automatically gravitate to is a bit of a chicken and egg thing, that, well, if jobs are declining, then stocks will go down. But it's actually more stocks leads the NFP report. So if stocks are beginning to decline, which they have since early last year, then you'll see NFP, or non-farm payrolls, or total jobs in the economy, begin to decline. Once they start to, month over month, stay down below that baseline of 0 and start heading into this negative territory over an extended period, that's associated with recession, which, if you ignore CPI numbers and look at real inflation, technically we have negative GDP growth. So, which is what creates that. That's the definition in some respects of a recession itself. Well, how might we use this information? What we look for is we look for a trend in the NFP report. If we continue to see negative numbers, then we would continue to anticipate the stocks are probably going to stay down, or that there's a lack of strength here overall. In fact, here's an interesting chart as to how we might transfer that information into the forex. So what's sensitive to stock prices? Well, the yen. It's an alternative investment. It's kind of correlated as traders seek high yields. They may short the yen and they may buy equities. So in 2001, for example, last time we had a nice stretch of negative job growth, we get this amazing head and shoulders pattern, which resulted in a significant decline to the downside on the dollar-yen currency pair. So we see this strengthening of the yen as those shorts begin to unwind themselves, those high-yield shorts begin to unwind themselves. And right now, we've been dealing since about the beginning of the year with a trend of negative numbers. Now, we have already seen a significant amount of downside on the yen, but as we continue to just sit here at resistance and even peeling off of resistance a little bit this last week, this is something we don't want to ignore. Let's look at the NFP report as it comes out, the official one, as it comes out on Thursday of this month. We'll see if that trend of negative numbers is continuing to extend, because that may trigger much more intense coverage and hedging strategies in any short yen positions, including carry traders potentially wanting to make sure that we're offsetting some of our risk until we start to see that trend reversing itself, where longer term higher yield strategies may begin performing much better and come into favor again. So it's a report. We've gotten a little bit of a teaser. We're probably going to see negative numbers tomorrow. If we do see negative numbers, it's in line with the trend. We're expecting that to be correlated with negative stock performance, which in turn makes short yen positions very speculative. It should be covered and hedged against, if not potentially exited. So all of which we'll get a little bit more information as we get into tomorrow's announcement, give us a little bit more of a guidance as to how we should treat our trading over the next few weeks.